Hey everybody, this is the Bitcoin Beast talking at you, and this is part B of part 3 of the Bounce series of the trading series. This is the Bounce part 2. So hopefully it's clear as mud, right? There's a Bounce part 3A, and this is Bounce part 3B, because there's a lot to this. This is a lot. Now we're going to get a little bit more deeper, a little bit more technical behind that. And I had to go to my other charting software. I know this software inside and out compared to TradingView, so I won't be as buggy and laggy and trying to fumble around and search. So I was able to pull this up and pull up a few zones so you could see very clearly the different types and how well supply and demand works in crypto. And you'll see different things what I call stacking and nesting as well. So where to begin? Now I have a lot of different indicators that tell me I got some support and resistance lines. When these bunch up together, I know that that's a pretty strong level because I got monthly resistance, and these are to the candle close, not to the candle wick. So it's a monthly candle close, the weekly candle is at the same place, and then the daily kind of moved up a little bit into that zone, and then this is a bigger zone. This is, I believe this is a daily zone. This box here goes all the way around here. The origin's over here. This is a Bitcoin 4-hour chart. And then we have zones nested inside of it. We have this zone here nested and this zone nested in here. That's called a nested zone when you have zones inside of zones. It's called nesting. Another thing that you have is down here we have, this is a daily, this green box, this green outline here. We have daily, here's your daily support. That's where the daily close was. The most strongest recent support line, the most strongest recent low in the daily chart. And then here we have, these are like 1 hour, the green is 1 hour, the purple is 4 hour demand zones. And so you have, now they're stacked and nested. So this is a pretty solid area of support right here between 6607 and wherever this ends down here, all the way down to 58, probably like 58.9, something like that. If I can get more exact, 59,000. So that's a pretty solid zone. It's going to take a lot of selling to crack this zone, because you got all this stacked demand, what I call stacked demand, and then you have nested demand. So you have daily demand here, and then you have this hourly demand zone here, 4-hour zone here, hourly here. Here's a nested inside of a nest. This is 4-hour and daily stacked inside and nested inside this daily, and then so on and so forth. Then you got more demand stacked here, more demand stacked here. So it's going to take, it's not going to, Bitcoin's not going to crash through this zone. And then I have this here. I marked this zone off right here. This is where I marked this. This was I was going to mark it here, but then I realized that the origin was this zone right here, because price raced away here, and then it became back in balance, and so it became a supply demand, a supply turn demand zone. So this was originally a supply zone. Price shot up in here, got in balance, then shot back down, created a demand zone down in here inside the daily, the big daily demand zone. So now it's a nested zone, and then came up here, had a little pullback there, bounced around in here because this was a supply zone, but then broke through and it raced through there. So now it's a turncoat. This turned into a turncoat. I thought it's also a, if you didn't know what this was here, if you just ignored from here back, this would look like a rally base rally. This is what a rally base rally looks like. You got supply, or races up, stays in balance for a little bit, and then races off again. So this is a good area of support, and as you can see, barely touched it, bounced out, rolled around a little bit, crashed in a little bit harder, and then it barted. This is a Bart Simpson pattern, very common in uh, in crypto and in Bitcoin in particular, all the higher ones, Bitcoin, Ethereum, and stuff. What happens is a lot of leverage traders, they'll get in here in these at these strong support zones, and they'll go leverage long. They'll go in here, then they cram their stops up, and usually they're right in here in these zones right here. There's probably a crap ton of stops right up in here, and then it got tapped again. A lot of liquidity. That's what creates that, and then eventually they get liquidated. But they're happy. They made their pip. They made their points right here. That's what they, and they were on leverage. And so when they're on leverage, they borrowed that money. And so these happen really quickly, and then you get these Bart Simpson patterns. That's what creates those, is the leverage traders doing that. And then so it crashed right through. Now it's pretty dead at this point, because it was a supply zone. It raced out, became a base, and then zipped out. So now it's a base zone. So it's been two zones at once. So now it's a third time. It's been tapped once, tapped twice, boom, barred it out of it. And then they came down here, and then the bots and algos and the leverage traders started piling in here at the daily. They're in this daily demand box. That's where all the degens are waiting for that next buy to get in here, and then they're going to dump it wherever they can. Oops, sorry, I didn't want to move that. So that's how, and then it came in here, and you see it kind of at that point it was a dead zone. Once it broke through here, it did tap here one time, probably left some sellers behind, got back down, and then it became a dead zone at that point. Once it was tapped here, it was probably a dead zone. But you can see how that the origin was here, and it became what's called a pivot point of well, it's not really a point of control, but it became a supply zone. Then it became a turncoat supply, and then it became demand again, and then crashed. Supply again one more time, tapped it and went out, and then it cleared out. So that zone's probably dead at this point. So we go ahead and get rid of that zone. But that's how long these zones can last. And so so you have zones inside of zones, nested zones, stack zones. Stack zones are very important. I always look for these when I'm in my long-term strategies. I look for these to maybe possibly go, take a big position if price ever reaches down here. I would definitely look at scooping up some Bitcoin here in this daily supply zone at 63. There's a lot of buyers just chomping at the bit, waiting to buy some Bitcoin here. And like I said, this works very well in crypto. It's very, 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 very well in crypto. You can see I can go all the way down here. There's another big supply zone right here where you got all all my closes from weekly. Oh wait, no, that's something different. Never mind. My bad. That's something different. That is not support. So, but there is a demand zone further on down. So you can go in between these zones. Price is going to move pretty rapidly because there's no willing buyers. Then we got more buyers down here at 42.50. Weekly support is there. And then you got some nested and stacked demand here. So once again, it'll be hard to crack that. But this is going to be a real tough nut to crack right here. It is not going to be easy to get through this. If they think that they're going to crash Bitcoin down into the 50s, it's going to be very difficult to do. And so it's often called a heat map, is another term for this. So that's in a nutshell. That is bouncing, and it has all to do with supply and demand. Very simple, and it's all about balance and imbalance of buyers and sellers, and orders getting left in the dust and then getting re-triggered in those order blocks. And this works extremely well with crypto. I don't particularly like trading crypto. I'd rather do a buy and hold strategy with my crypto, because I know that the potential is a lot higher. There is some what they call opportunity costs, but I'm okay with that because it's also lower capital gains tax, and there's other opportunities that you go, you don't, I don't have all my eggs in one basket. I mean, I do hold a lot of crypto, but I don't hold all my eggs in one basket. But I am holding it for the long term, and I will go into another video and describe how I dollar cost average into Bitcoin and the shit coins, and how I play that in a later video. So I hope you enjoyed this video. This is part 2 of supply and demand, the bounce. And please like and subscribe to the channel if you like what you're seeing. I'm giving away all the secrets. I'm cutting away all the fluff, all the bull crap. I've got other videos planned coming up. I got one more trading video. It's not trade, but it is a fairly effective way, but it's probably the lowest probability that you can get, and it works pretty good with Forex. I haven't really seen a whole lot of work with it with crypto, but it does work with Forex on the longer term time frames. It's not too bad. So thanks for stopping by. Please like and subscribe, and we'll see you in the next video.